Good morning. Britt Brown here with Trade Hive. Wanted to go over some charts today, just kind of looking over a few things, and let's get this day started. As I said before, the playbook, pre-opening playbook, it is 7:54 Central Time on the 9th, which is Monday of February, is not. I'm not trying to give you a trade. I'm just trying to give you a bias to line your bias up with another trader that has over 30 years of experience doing this and hopefully give you some structure to what we're looking at and how we ultimately want to trade it. A couple things to note very quickly is that we have CPI this week. That's the big number. If you've watched my Commitment to Traders report, thank you very much. If you haven't, go check that out. I wrap up the ES and the NQ together. The reports itself are on the website at tradehivecommunity.com. With that said, I've got the weekly chart up right now, and just the things that I'm watching, right, is I've got a red box up here. I've been watching that for weeks now, and the projection to the downside is 23,468.50. I did not believe we were going to get all the way down there, and as I reported, my bias was to go test the monthly trend line, and that's this green one right here. And I also said that I don't anticipate that's an imbalanced trend line, and I don't anticipate that to be something it would bounce off of, but more or less, let's go check it out, and then let's go back up and find point of control. And that's kind of what we're looking at. The only reason I have this up here is that I just want to reiterate, we are in a long-term bullish trend, and we will likely remain here, perhaps maybe for the rest of my life. That's just the way it is. So I set up my week on the Commitment to Traders report. Down below here, you can see this area. This is just basically saying, hey, this is what's going on with the COT. And so I want a brief look at that when I start my day. I'm going to flip over here and let's get into the daily to start you out and give you a bias for today. Again, we had a nice bounce off that monthly once the market recovered. These blue lines right here represent the consolidation pattern we are in on the daily chart. And as I keep saying, I've been saying this for a couple of months now, and that is when we get up into the high premium side of things, the institutions will take risk off the table. There's no reason right now to go up and make new highs. But listen, it's the NASDAQ, it's the ES, we can do whatever we want, right? So, but you can tell when the market gets aggressive and bullish, we get hit. And that's because the institutions, it's not that they think that the market is bearish, it's that they have to take risk off the table at certain levels. That happens to be a level for them until proven otherwise. So I was really hoping and got it. This test down towards the bottom of this consolidation, that is deep discount. And we had a nice rally on Friday as we anticipated. If you watch the COT report, I go through my index. I look at things and kind of project what I want to do for this upcoming week. I'm bullish, but not necessarily at the level that we're at right here, right now. And let me explain real quick. We're trading right around that 25,090 mark, 25,100 mark. So we're in a large consolidation range, and because we're above the monthly, that red trend line, we're sitting right at the daily trend line, and we are below the green, which is basically the weekly. What I see is just high volatility right here. I am more or less turning into that swing trader down in the deep discount zones, and then I revert back to the scalping aspect. We got to let this market, for you retail traders out there, especially those that are working on becoming professional traders, if that is your dream aspiration, we have to let this market, this is where the big boys are playing. And that's why you're seeing 60-point candles in a 1-minute candle. So I said it the other day, it would be a good time to put an ATR on your chart just for the time being and let things get into that 30 for an ATR, which is a great scalping candle. 60 is high volatility, and these guys are throwing around 50 and 100 lots. Again, daily bias assessment, market's not trending, it's auctioning. And that's important to understand. The location, we're mid-range, slight discount. We have no directional dominance yet, and that's what we want to wait and see. Let's talk about probabilities on this daily chart. When we look at a rotations towards the 25, 635, 750, that point of control, when you look at the volume profile over here, it's about a 45% probability. A rejection retest of that 24, 550, 600 to run up to that level and then reject it is about a 35%. And then a chop and balance continuation, 20%. But keep in mind, it's Monday, right? So know where you are, especially on the daily side of things. Let me pop up the 4 hour because this is really the driver of the market itself. And again, I've posted this playbook on the website. I give it away for free to the public. And again, it's there to help you make better decisions. So what do we have? We have this we had this one area that we were trading back and forth from point of control. And we popped a gray box down towards the bottom. We ran up, we popped another gray box. And when we have them on both ends, that's when you're getting those 1,000-point moves one way or the other. What I don't really want to see is a gray box on a bearish, midway through a bearish short-term trend. And the reason being is that means we have a lot further to go. What I like is them on the bottom and the top for a quick move, and I'll get into that on the 1 hour. But on the 4 hour read, the market's compressing under resistance. Acceptance above that 25, 241 area is going to open rotation higher and maybe challenge that more so the POC, this line right here, and then try to make a run back up into the premium side of things. Failure keeps the markets volatile and mean reverting, so that's important to understand. What would probability-wise, what we're looking for is a push to that 24, an acceptance over 25, 241, and then a push to the 25, 600. On the probability side for the 4 hour, that's a 40%. A rejection there is a 40% probability. And then just a continued compression is 20%. But again, it's Monday, so it's tough to read something like that on a Monday because it's chop. And there, I would imagine towards the late end of the day, you'll see some position squaring coming into CPI towards the end of the week. So let's look at the 1 hour and get a read on that for you as well. And then we'll take a quick brief look at the 5 minute. So this is promising, right? And I mentioned this the other day. We had a nice gray box down at the bottom and the market just took off. We were down in deep discount. That made all the sense in the world. And now we're up in this zone, right in this area right here, just below this red trend line. Again, you have a lot of people that were stuck on the way down here. So I think this is going to be tough to get through. I do like this gray box right here. If we can get running, I think that is what is going to, a push out of here is going to be what runs us up to that 25, 500 area, 600 area. But short-term structure is constructively bullish. Pullbacks are viable if the structure holds, and that's kind of my bias is leaning towards is look for those pullbacks, get involved in that market. I would not be disappointed. I'll just say this. I would not be disappointed if we went down and made a bigger push at the maybe a breakout below that consolidation low that I showed you earlier, and then a rejection, right? This is all about price discovery, and so keep things in perspective, I guess is my point. Bullish continuation toward the 300, 500 is about a 50% probability. Sorry, I keep looking over at my candles, just trying to get a read of what's happening here before the opening of the market and if there's any position squaring. I do see some sellers here. Oh, MNQ, a couple people got aggressive, sold 210 lots down to 25,084.50. I would imagine that's right now looking with Delta. That was the aggressive Delta spot. So obviously the dogfight's right here. Probability wise, like I said, bullish continuation towards the 300, 500 is a 50% probability. Failed structure back into value. That's that 24,850, 24,750 area is 30%, and range chop is 20. So let me summarize this for you. Upside rotation attempt 45 to 50%, downside sweep and rejections 30 to 35%, and the balance chop is sitting at 20. So this is a rotational high volatility environment, and directional conviction requires acceptance above 25,241 or a rejection from it for a more prominent bias one way or the other. With that said, I may go live later on in the morning once I get through the opening, get my trades done, and then I will switch over. I will offer a free link to go to the GoToMeeting site so there's no latency issues for you. That's your choice. Obviously, there's a little bit of a delay with YouTube, and I've got different charts. If you're in the go-to side of it, you're going to see order flow. You're going to see where those traders are making a commitment, and you're going to see how I scalp. And I think you'll find it very interesting how I call that market. Other than that, listen, again, it's Monday. Be careful. Hopefully that helps you out, and appreciate you taking the time. Hopefully we knocked the ball out of the park today. All right. You guys have a great day.